Hi guys! Welcome ulit! At yung lesson naman natin for today ay responsibility accounting. Sa isang responsibility accounting system, hinahati mo ang iyong organization into responsibility centers. And these responsibility centers are given autonomy so that you can evaluate them based on certain criteria. So, hinahati mo ang iyong organization into cost centers, revenue centers, profit centers, and investment centers. So, sa isang cost center, you only keep track of cost. Ang example nito ay ang legal department or ang maintenance department, kung saan cost lang naman talaga meron kasi they don't sell anything. So, yan ay isang cost center. Tapos, hinahati mo din na meron ka ding mga revenue centers. Yung mga revenue centers mo, you track the revenues. Ang example niyan mainly is the sales department, where it's very important that you measure the performance in terms of sales. Tapos meron din mga parts of your organization that you delegate as profit centers. Yung profit centers, tinatrack mo dyan ang revenue at ang cost nila. For example, meron kang certain geographic locations or may isang branch na nandun. To measure that branch, best to track the revenues of that branch and the expenses of that branch also. And lastly, meron din mga investment centers kung saan tinatrack mo ang kanilang revenues, costs, pati ang investment mo in terms of assets na nilagay mo dun. And yan ay mga, kunwari, subsidiaries. These are large parts and product lines. No? How much is the revenue and cost of that product line? Tsaka magkano ba yung in-invest mo dun? So, these are the responsibility centers in your organization. Now, the cost centers, you evaluate them based on a variance analysis of cost. So, yung legal department or accounting department, you evaluate them, you evaluate these guys by comparing magkano yung actual cost nila versus magkano yung budget or dapat na cost nila. So, you analyze the variance, overshoot or nakatipid. Yung revenue centers naman, the sales departments, you evaluate these guys by, again, variance analysis of revenues. The variance between magkano yung dapat nilang nabenta at saka magkano talagang nabenta nila. That's how you evaluate them. Yung profit centers, you evaluate them using the segment income, which is basically the revenue minus cost. Of course, the bigger income that they make, that would be better, no? That would be better. Isang hint lang, no? When you say revenues and costs or investments, it has to be things that are controllable, no? Controllable by the segment para fair. So, say for example, for profit centers, when you say segment income, you measure them by revenues that they control and costs that they control. Pangit naman, bibintangin mo sila ng cost na wala namang silang control doon. So, yun, only controllable factors, please. And then, investment centers, you evaluate these, since they are a little more complicated, by several profitability measures na pag-uusapan natin mamaya. No? Return on sales, return on asset turnover, residual income, and economic value added. So, many more measures when it comes to investment centers. So, though these are the different centers, what they are and how you evaluate them. Let's focus more on investment centers kasi sa kanila yung mga performance measures that are a little more complicated. Okay. So, nandito tayo sa ating example, itong investment center na to, and let's try to measure the performance of this center. Bing Company has an investment center in Hong Kong. The board of directors wishes to evaluate the performance of this investment center. The following are the relevant data. So, sales, net operating income, average operating assets, and then minimum required rate of return 10%. Yan lang ang ating given. Sa baba, yung tanong, these are 4 out of the 5 performance measures that I will discuss. No? Iko-compute daw, you measure this center based on the metric of return on sales, the metric of return on investment, the metric of asset turnover, and the metric of residual income. So these are 4 out of the 5 measures that I'm going to talk about. Ngayon, yung first 3 are ratios. No? They are essentially ratios that since dumating ka na dito sa accounting, most likely, narinig mo na to. Yung first 3 is something na familiar to you, are some basic ratios from the fundamentals of accounting. So, para lang naman ma-refresh ang iyong mind, Ang return on sales is a ratio used to measure an investment center. Return on sales, ano ang formula niyan? That is a return on the sales, that's a net operating income, divided by sales. No? Ganun kasimple. Yung return on investment naman, the return based on the assets. So, minsan tinatawag return on assets. So, the return, the net operating income, divided by, as a percentage, ilan nabawi mo out of your total assets or the average operating assets. So, there. And lastly, the metric of asset turnover, that is sales over average operating assets. No? Basically, ilang beses, no? Ilang beses mo na bawi ang iyong assets based on sales. No? Ilang beses bumalik sa'yo ang asset mo. So, based on these metrics, let's compute, no? Return on sales is the net income divided as a percentage of the sales, and that's 0.9 or 9% return. Yung ROI naman is the net income divided by the assets. It's it's 12%, 12.5% return on your assets. And asset turnover, that's sales divided by total assets. So, binawi mo ang asset mo ng 1.33 times. No? 1.33 times. So, these are your traditional measures based on financial ratios. At you should be familiar with the formulas and how to solve them. Ngayon, the more complicated one, residual income, is magkano yung sobrang income, no? After the minimum income. The actual income minus the minimum required, no? Income, the minimum required income. The actual income of that is obvious naman, that's 150,000. Now, yung minimum required income is based on the minimum required rate of return from the asset, no? So, ang sabi dito, yung minimum income daw is 10%. Ibig sabihin nun, dapat kikita yung investment setter ng at least 10% of the assets. So, kapag kunwari may assets ka ng 1.2 million, ang minimum na kita is 10% of that or 120,000. So that's 1, 2 times 10%. Yeah. Ayun. That's syempre 120,000. The residual income is the excess of the actual income from the minimum income. Since the actual income is 150, yung minimum required na income is 120, may sobra ka pang 30 mil. So that's your residual income. That's so another of the traditional ways to measure an investment center. So that's how you go. The last way to measure is ang tinatawag na economic value added. Minsan tinatawag na EVA, no? EVA. So ang computation yan, may formula yan. Basahin muna natin ang problem. The following year-end data pertaining to a done corporation, earnings before interest and tax, 800,000. Current assets, non-current assets, current liabilities, non-current liabilities, and stockholders' equity. So, those are balance sheet qualifications. Syempre naman, dapat balance yan. Syempre, kung i-add mo yung assets tsaka yung liabilities equity, you will notice na balance yan. A done corporation pays an income tax of 30%. Its weighted average cost of capital is 10%. What is a done corporation's economic value added? Ang formula niyan ay, nandito sa baba, NOPAT minus WACC times capital investment. So, yung NOPAT, ang ibig sabihin niyan, net operating profit after tax. So, tatanggalan mo lang ng tax. Tapos, tatanggalin mo itong portion na to, itong parenthesis. This parenthesis portion is called the finance charge. The finance charge. So, the profit after tax, and then you subtract the finance charge or magkano ang pabayaran mo sa iyong mga lenders and stockholders. Yung naiwan is basically yung the true income na natira sa company after paying all the capital. No? Now, to be clear, the WACC is the weighted average cost of the capital, and the capital invested is, nandito din, may sub-formula tayo na equity plus long-term debt. Equity plus long-term debt. So, yan, let's get right to it. Ang kita natin ay net operating profit after tax, 800,000. Meron kang earnings before interest and tax, But, kailangan mong tatanggalin yung taxes kasi NOPAT after tax. So, times, may tax rate na 30%, so tatanggalin natin. Ang NOPAT natin ay magiging 560,000 pesos after tax. So, ito yung 560, this part of the formula. Now minus the finance charge, how much we pay the people, the lenders and the stockholders. So, the capital invested is, yan, kailangan natin itong portion na to. Yung WACC, syempre, obvious, 10%. Yung capital invested is, how much ito? This is equity plus long-term debt. So, let's add that. The money that comes from the long-term debt, it's 1 million. Yan, galing pera mo yan, galing sa bangko. Tapos, ang pera mo din, galing sa stockholder is the equity sa 2.6 million. There. So, the idea here in the formula is that this 560,000, the NOPAT, you have to pay 10% times the capital investment. Ibig sabihin, babayaran mo ang mga nag-invest sa'yo. Sino ang nag-invest sa'yo? Yung equity, ibig sabihin, nag-invest sa'yo yung stockholders, yung lenders, nag-invest sa'yo yung liability. Babayaran mo silang 10%. Why do you pay them? Well, syempre, yung stockholders, you pay dividends. And yung lenders, you pay interest. So, yun yung 10%. Lahat na yun. Dividends, interest, etc. So, you pay these guys 10%. Then you have to give them 360,000 pesos. So, you have 560. You pay these guys 360. Ang maiiwan sa'yo is syempre 560 minus 360. Meron ka pang 200,000 at ito ang iyong economic value added. Now, what's the concept of this? Economic value added is supposed to be the true income of the company economically. It is a better measure than accounting profit daw, according sa mga ekonomista. Kasi yung problema daw sa accounting profit or sa accounting net income is that pag binabayaran mo daw ang mga lenders, ine-expense. So, binabawasan. Pag binabayaran mo daw ang stockholders, dividends are not expense. So, bakit daw ganun? Yung lenders naman, nagbigay sa'yo ng pera. Kung babayaran mo sila, interest, expense. Yung stockholders naman, nagbigay sa'yo ng pera. Kung babayaran mo sila ng dividends, hindi expense. So, bakit daw ganun? So, sabi ng mga ekonomista, wag accounting income. Gagawa tayo ng economic value added, the true income. Now, notice, in the economic value added, you subtract capital investment, hindi lang yung bayad sa interest, which is the bayad to the liability portion, the lenders, but binabayaran mo din yung dividends, na parang in-expense mo yung dividends kasi sinali mo yung 10%, for example, out of the equity. So, ang natira niyan, since tinanggal mo talaga lahat, it's the true economic income of the firm. Yun yung sabi ng mga ekonomista. So, that's another way of measuring investment center. So, once again, in responsibility accounting, you segregate your company into cost center, revenue center, and profit center. You keep track of costs and revenues and investments. Depending on yung cost center, you evaluate these guys by comparing magkano yung cost nila sa ano dapat. Revenue center, you evaluate this sales department, for example, based on magkanong revenue nila versus magkano dapat. And then profit center, you evaluate syempre because of the based on profit nila or the segment income, segment profit. And lastly, investment center is evaluated using return on sales, yung first three na ratios, return on sales, return on asset, or return on investment, and asset turnover. And the last two also using residual income, actual minus minimum, and economic value added, which is NOPAT minus the finance charge. So those are the ways to make a responsibility accounting system and to evaluate the different centers fairly and correctly for, to be able to judge them and motivate them so that your firm can meet its objectives. So hanggang dito na lang muna tayo ngayon. Maraming salamat and hanggang sa susunod na video.